Hello there, I'm Amira David. This is Boom Bust, and these are the stories we are tracking for you today. The S&P downgrades 3 major European oil companies, plus Macedonia shuts down its border to Afghan asylum seekers, further fanning the flames of the European migrant crisis. I've got the details on all of that coming right up. Then Monica de Bolle is on the show. Brazilian police are now investigating another top aide to President Dilma Rousseff on corruption charges. What does it mean as she tries to fend off an impeachment? We'll discuss. Then in today's Big Deal, Ed Harrison and I are talking about a new study that says banks are understating loan losses. So what does that mean for the economy? We'll get at that and a whole lot more on today's show. Don't go anywhere, guys. Boom Bust starts right now. We begin today with the latest downgrades out of Standard & Poor's. The credit ratings agency has reduced the grades of 3 top European oil companies: Total of France, Statoil of Norway, and BP of the UK. All 3 companies were downgraded by exactly 1 notch, leaving Total and Statoil with an A+ rating and BP at an A-. S&P said this development was based on its belief that the oil market would only partially recover by 2018, that oil prices would only rebound to about $50 a barrel by then, which is, of course, still relatively low. The credit agency also said it felt the oil companies were employing relatively weak measures to keep up their financial strength, and that they would likely struggle to meet the demands of lowering investment expenditures while funding shareholder dividends. Earlier this month, S&P moved to downgrade other major oil giants like Royal Dutch Shell and place negative outlooks on Chevron and ExxonMobil. Now let's move on here to the European migrant crisis. Macedonia has closed its border crossings with Greece following clashes between police and hundreds of rejected asylum seekers. The drastic measure came after Austria, Croatia, and Serbia announced on Friday that it would implement a daily limit on asylum seekers entering, thereby triggering a domino effect along the very popular Balkan migrant route. Now, by Sunday, Macedonia began denying the entrance of Afghan asylum seekers, saying they would be classified as economic migrants, therefore disqualifying them from gaining political asylum. And it has left thousands of migrants stuck in countries where borders have been closed. This has been a particular problem for Greece, which shares a border with Macedonia and is often the first port of entry for migrants into Europe. There's concern that the migrants could further overwhelm Greece, a country that's already struggling to find the resources to accommodate the influx. And all of this is only fueling the debate over how to handle this escalating crisis. European Union officials are now considering a long-term suspension of passport-free travel, which is now permitted under the rules of the Schengen Accord. Many officials want to avoid that suspension, however, as it would cost European economies billions of euros. We already know that U.S. student debt crisis is having a major social and economic impact on the millennial generation. And a new study shows that having a bachelor's degree might not be as beneficial as we thought. Boom Bust, Bianca Vicini has the details.
It's generally accepted that having a college degree will provide a more prosperous life than a high school diploma ever could. But new statistics are proving that theory wrong. An analysis by the Brookings Institution shows that students from poor families don't see a significant boost in earnings after college. On average, they earn 91% more than poor students who only obtain a diploma, while rich students see a 162% boost in earnings after getting their degree. Researchers aren't exactly sure why this phenomenon is occurring, but they have a few ideas. One is that students from low-income backgrounds pursue careers in the service sector, which don't usually offer lots of money. But the other ideas are a little more troubling, like the theory of poor students being less likely to move to different cities for work. Stagnant wages and high rent already make it nearly impossible for graduates from the middle class to do that. So it's irrational to assume that poor students could. What's more concerning is that researchers are pointing to a lack of resources during early education as the root of this problem. It's been proven that the educational achievement gap between the rich and poor has been widening, and it's now more obvious than ever in higher education. In a country where the current student debt balance is $1.3 trillion and growing, this new data is alarming. In addition to helping students deal with the debt they've already accumulated, policymakers will eventually have to turn their focus towards prevention.
$1.3 trillion, indeed. That's very, very alarming. And I understand there's also some major differences between the way the student debt crisis affects men versus women, which is really interesting. What do you know about that?
Well, women have made a lot of strides in education over the past 10 or 20 years. More women attend college than men. They actually tend to get better grades in certain areas as well. But they have a much harder time dealing with their debt. It's taking women much longer to pay off their debt than men, and it's disproportionately affecting black women and Hispanic women who will not make as much in their lifetime as their white counterparts, both male and female. Wow. So there's a big gender issue here. Overall, just a very thorny problem.
Oh, indeed. It's really, really unfortunate. Very, very interesting how it can be divided along gender lines as well. Bianca Fascini, thanks so much for that reporting. All right, to talk about Brazil, Monica de Bolle is on the show. Monica is a non-resident senior fellow at the Peterson Institute for International Economics. This week, Brazilian police obtained an arrest warrant for the architect of President Dilma Rousseff's electoral campaigns. He's the latest to be investigated for his role in a bribery scandal involving the state-run oil company Petrobras. It's now putting new focus on President Dilma Rousseff and her possible involvement in the scandal. So I first asked Monica to talk about how much this complicates her fight to stave off impeachment. And here's what she had to say.
Well, it actually complicates things quite a bit. Since the end of last year, things had started to more or less fall into place for her. You know, the impeachment proceedings, which had been going on at the lower house, seemed to have the pressure on that seemed to have died down somewhat. There was some articulation by the PT, her party, as well as some of her cabinet members to, you know, try and get some things going, get an economic agenda going, and so on. And then suddenly this, yeah, which is actually the way that these investigations have been evolving. You know, things seem to calm for a while, and then all of a sudden something big pops up. And this is really big because this is not only her campaign chief, but he was also former President Lula's campaign chief. So, you know, once it gets to him, then things really start getting uncomfortably close to her and to the former president as well.
Yeah, you made a good point. I mean, because I remember, you know, there being all this talk about impeachment, definitely before Christmas, before they took that recess, lawmakers. It was all about impeachment. And once that recess happened and they came back, it seemed like the prospect of her ouster sort of became a little bit more distant. So what really happened? I mean, how did we sort of see them, you know, go forward with impeachment, sort of pull it back? Obviously, now we're probably going to see them walk it forward again. But what made them pull it back in the first place, do you think?
Well, I think there was a very good articulation by the entire government, including the PT. So the governing party actually got together. It was up to then very fragmented. So there was, you know, the Dilma camp and the Lula camp, and everything was sort of looking like it was falling apart. The main coalition partner, PMDB, looked like it was about to just, you know, step out of government and become opposition. And then suddenly things turned because actually PT managed to come together and sit with PMDB and say, okay, let's find common ground and let's see where we can agree on certain things. At the same time, the Supreme Court in Brazil ruled on a very specific ritual because as these things go, there is no set way for impeachment to proceed. So the Supreme Court sort of has to set the ground rules for how the process should work and what what should be done. And when they made that ruling, they sort of made it very clear that impeachment was not going to be something, even if it went forward, was not going to be something that was going to be resolved, within a very short period of time. Rather, it was going to take, quite a few weeks to go through the entire process as they laid it out. And I think that kind of, made things subside and gave the government the kind of breathing room it needed to come together with its coalition partners and try to get some kind of consensus back in play. And I think they were pretty successful at doing it up until now.
Until that happened.
Yeah.
So now it is certainly back on the table. Well, corruption scandal aside, when you look at Petrobras, the country's state-run oil company, and you look at where its balance sheet stands with the most debt of any oil company or possibly even company, period, in the world, about $130 billion in debt. We're not talking about a small chunk of change. I mean, how do you expect the company to fare given its reliance specifically on higher cost, incremental deep water production? Because we know it sort of relies on a particular kind of production that, as far as I understand, can't really be done when oil prices are as low as they really are.
Yeah. So there are two questions there. I mean, one of them, of course, is the break-even price, right? What is the break-even price for these pre-salt oil reserves that Brazil has and that Petrobras has a big stake in? And how can that be explored now with a company that has such cash shortages as Petrobras currently does and is mired in this massive corruption scandal? The issue with the break-even price is that nobody really knows exactly what the break-even price for the pre-salt is, because these are several different oil fields. So there's some which are technically more challenging than others. So there's a kind of an uncertainty about how, what exactly that price is. But there is oil being produced from these pre-salt, from some of these pre-salt fields. So presumably, even though the oil prices are pretty low right now, there are still above break-even for some of these oil fields. As to the question of, Petrobras's debt, which is really the big sort of medium-term issue, it is a highly indebted company. Not all of that debt, of course, is coming due within a short period of time, but some of it is. It has some important financing of some debt servicing needs coming up in 2017. It can still service what it has to service in 2016, given the current state of its balance sheet. But for 2017, things are starting to look tricky. And it's no wonder that there are people already speculating that the government might need to support Petrobras in some way.
Right. And I was just going to ask that. I mean, what do you think about the prospect of a bailout? Do you think the government would come to their rescue if there was a real liquidity problem?
Well, it would really have no choice for many reasons. I mean, first and foremost, Petrobras is a symbolic, it's a symbol of Brazil. And people do sort of associate, Petrobras with the sovereign. So in a sense, if there were to be some very grave episode of financial distress at Petrobras, this would be perceived as an episode of distress in the sovereign. So, there's that connection, which of course the government would be hard-pressed to not allow people to think about. So the government would definitely, I think, come to Petrobras's rescue, whatever form that might take. It could involve some direct, cash injections into Petrobras via international reserves or something to that effect, or it could involve some other plan that we don't yet know what it might be. But it would certainly, the government would in no uncertain terms, leave Petrobras, adrift.
All right, time for a quick break, but stick around because when we return, Danielle DiMartino Booth joins us to talk about why we're seeing such a strong correlation between the oil and equity markets. What's that all about? She'll weigh in. Then in today's Big Deal, Ed Harrison and I are breaking down a new study that says banks are understating loan losses. But isn't that some risky business? We'll discuss on the other side. Stay with us. And as we go to break, here are the closing numbers at the bell.
For decades, the American middle class has been railroaded by Washington politics. Big money corporate interest has drowned out a lot of voices. That's how it is in the news culture in this country now. That's where I come in. I'm Ed Schultz. I do the news on RT America. I'll make sure you don't get railroaded, and you'll get the straight talk and the straight news. Question more.
Most people think to stand out in this business, you need to be the first one on top of the story, or the person with the loudest voice, or the biggest ratings. In truth, to stand out in the news business, you just need to ask the right questions and demand the right answers. Question more.
Welcome back to the show. To get her Fed and market insight, Danielle DiMartino Booth is with us. Danielle is the president of Money Strong LLC and also a former advisor at the Dallas Fed. Now, in Europe, Mario Draghi is talking a different game than Fed chairwoman Janet Yellen, taking the ECB to new dovish extremes. Edward first asked Danielle why European shares are selling off just as hard as U.S. shares, even though European corporate earnings are actually increasing at a fair rate. Here's what she had to say.
Well, look, there are limitations to what Mario Draghi can accomplish with quantitative easing. And I think that most people who have been watching central banks' behavior around the world understand that there's simply not enough bonds out there for him to make the same impact with quantitative easing as he has done. Plus the fact that I think the world psychology is shifting in terms of how much quantitative easing can accomplish. At the end of the day, the United States is still the largest economy in the world. China is obviously slowing. You can basically divide their GDP in half. That would take the World Bank's estimate of global GDP to a complete flatline this year, and that will severely impair the global economy, including that huge exporting engine we call Germany.
You know, before we get into the China thing, I want to talk about oil here, and I know that they play a big role there. You know, we talked about this earlier. Recently, I've noticed a high degree of correlation between oil futures prices and the S&P 500. You know, when oil goes down, so do U.S. equities. When oil rises, so do equities. Right. So why are we seeing this correlation between oil and equity markets?
Look, I think there's a highly symbiotic and frightening relationship right now between oil, and we'll have to bring China into the discussion, I'm sorry, Ed, but between oil, the yuan, the dollar, and Fed policy. I think one of the reasons that we're seeing a rebound as we head into this Fed decision today in the oil price is because investors are probably anticipating, outside the inventory data, investors are probably anticipating a dovish tilt to the statement, which would, of course, dash the credibility of Federal Open Market Committee members. If there are adamant signs and insistence in the statement that they'll be tightening, that will feed through to the dollar, and that will in turn feed through to commodities via the threat of further Chinese devaluation and its impact on the entire commodities complex, of course, including oil.
Well, yeah, there seem to be three things that commentators pinpoint as driving recent market volatility. You know, the first thing is a strong U.S. dollar and policy divergence. That's one. A weakness in China, currency depreciation there, and that country's export of deflation globally. That's two. And then the decline in oil prices and the concomitant impact on corporate capital investment. That's three. Which of these
They're all related.
Yeah, but which do you see as being behind the swoon in risk assets? Is it the full basket, or is there one that is really driving the bus here?
You know, look, if there's anything that policymakers have learned begrudgingly over the past few months, it's that the United States economy is not the only engine powering the global economy. China matters. And overnight, we got data out that showed that industrial profits in China had declined for the first time in 15 years. That's going to make a difference when you consider at the margin how much the Chinese economy, when it was growing, was driving the global economy. So the fact that they're slowing here in the United States because of energy, in addition to what's happening in China, I don't think you can separate them out, Ed. I just don't.
Right.
I think that they're both contributing to what we're seeing in the markets. And if you're seeing a rally in risk assets, I think that's people sniffing out no rate hikes this year.
Right. Now, you know, we've seen a lot of emerging market crises in the past. Mexico, 94, Russia, 1998, Argentina, 2001. But, you know, China has $3 trillion in Forex reserves. Isn't that going to be a buffer against economic volatility?
Well, it's funny you ask about Chinese reserves. Unfortunately, they've already earmarked $1 trillion of those reserves to help build the Silk Road so that they can eventually have true trade routes on the ground all the way up to Europe. So they've earmarked that $1 trillion, and I don't think that they're going to spend that. There's another $1 trillion of that $3 that is highly illiquid and cannot be readily deployed. So that leaves them with $1 trillion. That's a pittance of what their monetary supply is, their M2, if you will. So I don't think that there's as much ammunition as many investors think the Chinese have on hand in the form of foreign reserves.
And so that means devaluation is going to continue. Is that what you're saying?
Absolutely. And I think that the IMF giving China basically the green light to devalue their currency began with their acceptance into the basket. And it was a de facto admission that one day they would no longer be pegged to the U.S. dollar so that the baby steps could begin.
Hello, guys. It's Big Deal time. I'm sitting here with Ed Harrison, and we are talking about a new study that says banks are hiding losses when earnings are down. Sounds a little bit nefarious to me. The question is, what it could all mean for the economy? So, Ed, let's start with this study. Tell me, why banks are really underestimating loan losses here.
Yeah, and nice color scheme, by the way.
There you go, pink on pink.
Yeah. So basically, the study was by a accounting professor at Western Washington University, and what he found is using econometrics that, in fact, when earnings were lower, banks would under-reserve for loan losses, and that basically means that they have a provision for how many loans they expect to lose, and there's an accounting fudge that you can do, and you can recognize those losses immediately or over time. What they've done is when earnings were lower, they would actually under-reserve so that it would flatter their earnings and make things look better. But ultimately, down the line, they're going to have to recognize those losses. So ultimately, it leads to larger losses down the line, especially at the end of business cycles.
Isn't that basically financial engineering in some sense?
Oh, yeah, 100%.
Yeah, that's what it sounds like to me. I mean, but at the end of the day, I mean, are we just supposed to chalk this up to, this is the business cycle? This is how it works?
Yeah, I mean, we should chalk it up to the business cycle in the sense that what's happening is that when times are good, people are really optimistic, and they're under provisioning to a certain degree. And then when times are bad and earnings start to catch up with them, they want to continue that under provisioning. They want to make it look good, but really what's happening is that bad decisions that they made are starting to catch up with them, and then eventually they have to take it in one big chunk. And so that means that earnings go down a lot, and when those earnings go down a lot and turn to losses, then you have they pull back on their credit. Mm-hmm. So basically that's what the business cycle is all about, is that credit starts to be husbanded very severely, and then people who would have gotten credit don't get credit, and that leads to a recession.
Yeah. So what does this say about the way investors should be looking at bank earnings? I mean, should we be worried about the information that these banks are putting out, the numbers that they're reporting? I
think that we should be thinking that the bank's earnings are actually potentially at this particular point in the cycle not reflective of what's to come going forward. We've already seen a downtick in earnings for U.S. banks. U.S. banks are starting to take it on the chin, and so that would suggest if this study that was done by the accounting professor is correct, that in fact we will see more losses going forward because they're actually under provisioning at this particular time in order to flatter their earnings.
Yeah, I mean, when you read the news, you would think that banks are feeling pretty optimistic right now because just recently I read that Bank of America had unveiled a new affordable mortgage program that offers consumers the option of putting as little as 3% down. 3%. It's incredible and requires no mortgage insurance. I mean, what do you think about that?
Yeah, so, you know, on the face of it, I think it's pretty bad. I'm very skeptical about it. But I think that a lot of it has to do with a regulatory dodge. Because basically, at the end of the day, the FHA, the Federal Housing Administration, they allow mortgages as little as 3.5% down for people who have FICO scores in the U.S. down to, I think it's 580. And now 660 is actually where you get to the cutoff for subprime. So they're actually allowing some subprime borrowers to borrow 96.5% against the house. And they're the ones who are footing the bill for that if bad things happen. But what they've done basically is they've applied penalties to Bank of America and other banks for infractions for poor documentation, et cetera. Bank of America is looking to get around that, and they found another entity that will do the mortgage insurance, if you will. That is, when the losses come, they will take the losses. And so B of A is really funneling these mortgages into Fannie Mae through this entity. And so they don't really have a whole lot of skin in the game. And so for me, that's the real problem is that they don't have these mortgages in their books. They're just offloading it into mortgage-backed securities.
So do you think they are well aware that this is high risk for them?
I think that they're aware that at this point in the cycle, because interest rates are so low, when people refinance, a huge percentage of their mortgage goes to paying down principal, and therefore credit growth is actually flat since like 2011, 2012. They need more credit growth. They need more net interest income, and so they want to get that income. And so even if it's high risk, that's the kind of stuff that they're doing.
Wow. Crazy tactics here, Ed. And we'll talk more about it, I'm sure, on future programs. Thanks so much for weighing in. We love hearing from you guys, so tweet at all of us at EdwardNH. Don't want to screw that up. Bianca Fascini, Amira David, and remember, you can see all the segments featured in today's show on YouTube, youtube.com/BoomBustRT. From all of us here at Boom Bust, thanks for watching. We'll see you guys next time.